Welcome, guys. Good to be back. Haven't been here for a number of months. Just responsibilities with FX Bootcamp have sort of had to take priority, so it was good to get an invite to come back and do this monthly special webinar for you guys. I've decided to just call it a day in the life of a full-time trader. Basically, what I'm going to be doing, guys, is just highlighting how, as a full-time trader, I trade, and along the way give lots of examples and trading tips and stuff. And for you guys out there who are trying to become full-time traders, going to give you guys some good insight to maybe gaps in what you have in the way you're trying to accomplish that. Okay. So there'll be lots of examples, lots of little trading tips, and if you guys have any questions along the way here, just feel free to ask. Okay. I'm not going to be doing any live analysis of, what do you think the euro is going to do today or anything like that, guys. It's all about the bigger picture here, turning as many people as you can into full-time traders. Okay. And anyone in this room who still has a full-time job and lots of other responsibilities, but still trying to become a trader and stuff, there might be some good little tidbits in here for yourselves as well. Okay? So there'll be a little bit of everything in here for everyone. So, let's get started here. Just a quick disclaimer, guys. Purpose here is education. Okay, we'll not be doing any alert servicing. Don't take anything I say about any currency pair as, oh, I'll short or long this right now just based on what he said. That's not what this is about. Okay? Any learnings you should do should be on a demo account, even a simulated account. By that, something like a testing tool. I think I did try Trader. I've got the Holy Grail right here sitting on the desk. I'll get it out in a minute. Okay? Any trading should be learned on a demo account, guys. Remember, when you're trading in Forex, you're over-leveraged, and you're finding this is sometimes only working for you. It's often working against you. Your past performance will not predict your future results when trading. Very important, and probably most important, never trade the money you cannot afford to lose. I really like this. I really like this bit. Even a simulated account like a back testing, which I'll be covering in the second part of this webinar. Okay, so a little bit about me. A lot of you probably heard me before. Heard me speak at FX Street. I have lots of YouTube videos out there with FX Bootcamp. I'm the Asia coach at FX Bootcamp, so I look after primarily the Asia session. And I'm also a trading mentor for FX Bootcamp. So that's traders who want a little bit of one-on-one coaching. Okay, the way I look at trading, professional trading is not a simple thing, as most of you have found out. Trading is a very difficult thing. If you read any trading psychology book, they compare trading to being a professional sport almost, like a professional tennis player, golfer, high-rated job, that sort of thing. Those sorts of people need coaches, they need mentors, and all that sort of thing. Trading is no different. Okay? Boy, I'm not going to go into over-leverage. Over-leverage is your 50 to 1 or more. It's high compared to stocks and things. G'day, George. How you doing? Right. Professional it's a lot of hard work. So I'm a trading mentor. Okay, I trade. I mentor people with FX Bootcamp. Now, a little bit about my style, if you're interested. Okay, I'm a little bit unconventional. I'm probably not your normal trading coach. I don't stand up and coach probably the way I see it. I'm a little bit different. I think you need to have different angles. I think you need to do different things to get through to different people. No one's the same. There's 101 ways to make money in trading. And you need to almost get people to have those light bulb moments versus you trying to hammer it into them. Okay? So I try to be as different as possible. When I educate people, I'm sort of doing basics of education, but I'm also trying to sort of almost mentor people along the way. I'll have someone come in my room and have an issue or look at something in a certain angle, and we'll take it and go turn it into an hours of learning. Someone will come in the room and go, "What's your take on GAN fans?" Well, I haven't looked at them for a while, but let's throw some around now, and we go and have 1 hour of ooh-ah moments looking at that, and hopefully people pick up on it, and they run off and become expert at it. Okay, that sort of thing. I sort of like to have this open classroom. Yeah, I do have a black cap on, and a black bow tie, sitting here in my home office. A bit like the old traditional lecture theatre type professor look. A bit of a wild hairdo and all that sort of stuff. I like sort of like the students to lead the class. Like in Asia, we're like a group. We're like a team. Cricket. Yes, I'll get all through this, guys. So I like the class as a group. We've got each other's backs. I like people to share their analysis, their problems. Lie on my couch, as George says. I'll have someone who's psychologically been damaged, and we lie them down on the couch. We go through all their trades, and we have a good look at what went wrong, and we sort out their problems, and it's beneficial to the whole class. Okay, so I like the class to sort of drive things. If the class drives things, it makes my job easier, but it's beneficial for everyone because it's best for me to fix people's problems. If I don't know the problems, it's hard to fix. Okay? And I'm very open to there being multiple perceptions in market conditions. I'm not someone who just looks at the charts and goes, this is down today, so you should all be shorting. Sometimes I'll look at the day and go, guys, you could be bullish or bearish today. I don't mind. It's all about where you're going to get in that trade and how you're going to manage it. Okay, so I'm open to people having different perceptions of the markets. I'm open to people using different indicators. I'm open to people using their own opinions. The big thing for me is getting them in to be patient, conservative, quality, and management, and they'll all be good. Okay, so it's a little bit about me. And that sort of coaching style has changed a lot across the years. Someone who might have been at boot camp a long time ago. I'm a very different teacher now, but it's all learned on best practices, continuous improvement as a coach, and all trying to get you guys to be those full-time traders, a little bit like myself. Okay, now a little bit before we get into about boot camp. Anyone who doesn't know, our services have changed a lot lately. Okay, if you go to fxbootcamp.com, lots of right on the homepage, lots of quality videos for you to look at. You can look at all these things for free now. You used to have to pay. Okay, so there's hundreds of educational videos in there. We also have a brand new news service that I believe that you can log in and get for free. You can look on the calendar every day, okay, and there'll be live news events with our quant analysis, Kurt Worley. I actually find them very beneficial. I've been going to them myself. And his latest NFP news that he did was very beneficial to helping me trade a few weeks ago. I can tell you that. So, new services, and one thing that I wanted to really highlight was, if you didn't know, FX Bootcamp has live trading, free live trading, for about every session. I think an hour, the first hour and a half is live at no cost. Okay, you can go into FX Bootcamp, go into live trading, you can register, and when you're in there, you'll see, the coaching will be happening in here. Okay, in the screen. And if you've missed it, because you're working or something and you're interested, all the recordings for the week you can see down here. They're all They're all listed down here, and you can go back and look at, say, the first hour, hour and a half of every session. And I know I make sure that I put a lot of really good educational stuff in there. We're usually looking at what happened the previous day, looking at what's going to happen that day, making some trade plans and stuff, so it's all good stuff. Okay, so I just want to let you guys know that's happening at FX Bootcamp now. Just making sure that message gets out there, because I know a lot of people are interested in the live trading and stuff, and you can go and try it for free. Okay, hour a day right there. So, that out of the way, what to expect from this webinar. So, we're pretty much going to see an end-to-end how I trade, okay, which you can use as a template on how you might trade. Take what you don't like, take it away, add what you do like, that sort of thing. But it's going to cover all the essential bases that you need to be able to cover as a trader. Okay? It might provide insights into the gaps in your trading. Some people might find that something's been missing, and this webinar might help plug that gap. Hope that does. Give you some live examples, guys. All my examples will be in today's live market. Okay? We're going to look at backtesting. Backtesting is a huge thing in my trading right now, and coaching, and that'll be in the second half of this webinar. Very, very, very important, especially if you want to be a full-time trader as fast as possible. The backtesting is clutch. Okay, and along the way you'll see in red, I'm going to give lots of little trading tips, and we can have little discussions. And once again, feel free to ask questions at any time. Okay? So, send me an email, trytrader, to rob@fxbootcamp.com, and we'll sort you out. I would say something's wrong with your registered information. We can sort it out pretty quick, and you can get in there. Yes, it can be coded with robots. By the way, the request to can your webinar, 3-hour webinar, please be end-to-end how to code and make money with robots? Sorry, not not possible in the time frame given. If the webinar was like a year long, maybe. Anyway. I live on West Coast United States. I don't know about you guys, but unfortunately when it comes to Forex trading, I live in probably the worst part of the planet. West Coast America, nasty. If I want to trade New York, I've got to get up really early. If I want to trade London, I have to stay up extremely late. The only real time zones in my late afternoon to get Asia, and let's face it, Asia is okay, but man, seldom gives the really nice opportunities. See, used to live in the UK, Dragonfly, and you know, once you've been to California, man, the weather, you're not going back. So you got to adjust. Not much, boy, overall. Sometimes yes, sometimes no. It all depends what's happening fundamentally in the market. Anyway, so I trade Tokyo because I coach it, obviously. And I also trade New York. So I sort of do Tokyo and New York. That's my time. But not really with the spreads. So that's when I trade, guys. I trade in yellow here in these red boxes. This is my trading time. Sort of in here, in that red box, and in here. That's when I get that's my windows of opportunity. I really will be up for London. I'm not a night person at all. I'm a busy guy. I've got a young family, kids who wake up very early in the morning. And if I stay up and trade London, I need to understand that I'll probably get like 1 hour sleep and a kid's going to wake me up and I'm going to live off 1 hour sleep for the day, and I do not like operating off little sleep. I do find Tokyo dull at times. However, Harley, Tokyo is the shizzle, and I'll give you some very good reasons as we go along here. Okay, so when I started to trade, really want to trade Forex? Great. You live in California? Great. Well, this is the hand you've been dealt. You need to make adjustments in your trading based on where you live. Okay? You do not have the luxury of living in Europe, East Coast America, where you can start trading at, 7 o'clock in the morning, 8 o'clock in the morning, and get the markets live there. You do not live in Melbourne or Sydney, Australia, where you can quite easily trade all 3 decent sessions a day. No big deal. So you just got to make adjustments. Okay? Trader's tip. Well, I do trade a little time. Do you mean less time? Or London time, Borky? Not really. Maybe. I'm a little bit different. I trade when the market, as you'll see, suits when I want it to trade. I've never been a believer of, oh, you've got to trade London. Oh, make sure you've got to trade this. No. It'll trade when the trade is ready to be set up under my conditions. And if it's Asia, beautiful. If it's New York, beautiful. If it's London, beautiful. But I don't necessarily sit down and trade a specific session based on it being a session. And guys, anyone who's living, big trader tip here. If you're living in West Coast America or anywhere on the planet, well, I've got a guy in my, I'm coaching a guy right now who's just joined boot camp, and he's like, I'm thinking of moving to London. I'm like, what? Yeah, it's the best time. I think I'm going to move to London. I'm like, are you off your rocker? Why do you want to move to London? Why change your whole lifestyle? You can adjust. You can change the way that you can make trading meet your expectations. You can easily you can do all sorts of things, Borky. That's one of them. London is the best session probably based on liquidity. And that's it. London lately has been looking pretty average. London will sort the boys from the girls. Or men from the boys, I should say. Not the boys from the girls. London can kill you, destroy you. They got good curries in London. Good little bit of Indian curry. New York's good. I like New York. Anyway, develop on where you live. Okay? I've mentored a few people who live in West Coast America, Arizona, Phoenix, Arizona. Mentored them. They've now left boot camp and they're now doing the full-time trader thing. They just needed to make adjustments based on where they live. They just needed to understand that you can't trade a certain way sometimes based on where you live. So you just need to make adjustments. Now, if you're some person that's, if you're like me living in your nice little house in suburbia, Southern California, you like it there, your family likes it there, kids in school, it's all nice and settled. You don't necessarily have to uplift all that and move to Europe just so you can trade. You can make adjustments to how you trade to keep everyone happy. Okay? Very important. Set your alarm. Most people still won't get out of bed. Okay? Now my trading week. My trading week, guys, I do not look to trade until probably Monday, New York. Just learnt over the years that sometimes that first chunk of the week is a little bit slow and can be a little bit funky. So Monday, New York for me. Remember, I live in Southern California, so the market here for me opens on a Sunday afternoon. And so I'm coaching people on Sunday afternoons my time. I will not probably look to make a trade earliest till Monday, New York. Okay, then, not looking to trade probably, I'd never probably place a trade after Friday, London. So what does that mean? Well, I'm essentially trading a 4-day week. So now I live in Southern California. I have limited trading time, and now I'm telling you that I don't trade the first half of Monday or the last half of Friday. Dude, I'm telling you I trade a 4-day week. Pretty much. That's the window that I need to make some pips to get by. Okay, just telling you like it is. I find that first half a little bit funky, and then by Friday, New York, I'm like, the week is done. Don't go lose pips at the end of the week now. You'll have a horrible week. Had a good week, turn the charts off, head down to the beach, go mountain biking, whatever. Just don't go and lose the money in some sideways market somewhere. Okay? And I do not trade news events. I will have the day off on NFP. I will not be around for FOMC. And I didn't write it here, but I especially do not like trading New York when the Europeans have their interest rate decision and have their the ECB press conference. Well, I just use I'll show you, I just use GFT, and I put alarms on my charts, and it sends me a text message when it's got there. But most platforms have that sort of capability. You can get stuff for MT4 or whatever you're using. Okay, so that's my trading week. Now, what I didn't write here, because it's sort of more of a day in the life, but I have a trading calendar in terms of major holidays as well. And I'm very careful around Christmas time, Thanksgiving time in the United States, and that whole summer period. I will change, I might come back to FX Street and talk about trading Northern Hemisphere summertime. And in the future, maybe in the next 5 or so years, I actually want to have 2 months off of the year. Pretty much June, July, or July, August, I actually want to have it off. A little bit Easter boyky that week, be a little careful. Because the markets just usually don't do what you want. Or you need to adjust your strategies. Anyway. My trading style. You guys are probably sitting there going, this guy's boring and nuts. I'm really conservative. So not only do I trade a 4-day week, and I miss news events, and I'm very careful when I trade around holiday periods. I'm also very conservative. So you're like, oh my God, do you ever place a trade? Like, yeah, I do. I just wait for the stars to really be aligned. Okay, falls into my trap. I rely, and this is very important, on really, really strong analysis. I'm trying to be like an analysis, the king of technical analysis. If you can be really incredibly good at technical analysis, it's the platform to be an incredibly good trader. And I'll show you how. I'll show you what I mean coming up. I like to plan my trades in advance as much as possible. My class, I will be coaching on a Monday in Bootcamp, and we'll be doing all our analysis and long term, and I'll be like, wow, this euro looks down this week, doesn't it? And we'll all agree, and I'll be like, if we get back to here, there's the mother of all shorts, people. And that trade will pop up on a Thursday. And it'll get executed, and I'll be like, remember our trade plan from Monday? There you go. We're in business. That sort of planning in advance. But I do plan for the day as well. And someone was mentioning about Tokyo. What do you think of Tokyo? Isn't it boring? Tokyo, if you can trade Tokyo, the big advantage is the market's generally quiet, and you get a nice chunk of time to plan out the next 24, 48, 72 hours. So that's what I do. I would take probably Harley maximum, on average, about 8 to 10, probably a maximum of 14 a week. I know some people will take 14 in a single session. I'm like, it's just not my style. Okay, I'm a little bit different. I'm not hassling 14 trades in a session or a day or whatever. I'm just saying it's not the way I want to trade. Certainly does. Certainly does, love. Okay. I like to manage every trade, giving every opportunity to reach profit target, guys. By that, I generally will assume that every trade I take has got the potential to race off into the sunset. But I'll give it that chance, even if I do think it could hit resistance or support 50 pips up the road. I'll try and manage it in a way that it's got an opportunity to go make more than that, and we'll take a good look at that. Okay, and very important, very important, because this is probably this is one of the biggest downfalls of traders. Do not break your trading rules. I'm no guardian angel when it comes to this, I tell you, but honestly, I cannot tell you the last time I broke a rule. It's been a while. And had some pretty good trading as of late. Must be honest. And I think there's a little bit of a direct relationship with that. So based on the way I trade, I have trading rules. Trading rules keep me from taking trades I shouldn't take. Trading rules keep my psychological issues intact. So if I don't break the rules, I don't have psychological issues, and I don't get into the trades I should have. And it keeps me being conservative and all those things, and they're all win-win situations. It's the biggest thing as a trader for us individual traders from home or whatever are the rules. Why is that? Because we are not accountable to anyone. It's not like if you work at a trading firm where, well, the firm says you must trade the daily trend and you must do this and you must do that. We'll take a look at a few musts as we go along. I'll show you as part of my examples with analysis. So as an individual trader, you're not accountable. It's not like you're breaking the company rules. You're only breaking your own rules. If I'll just take it here, no big deal. If I take a loss, that's only myself to blame. It's not like the boss is going to drag me in the office and give me a going over. So you need to be able to stick to your rules. That is probably one of the things that most people do not realize. And unfortunately, I've mentored and I know people through bootcamp that aren't trading anymore because they could not stick to their rules. Could trade, could make money, no doubt about it. Could see support, could see resistance, could make a 300 pip trade, could make a 175 pip trade, but they broke rules, and unfortunately the losses outweighed those good trades, and they just could not stop breaking them. You need to be able to stick to your rules. It's what I think is the difference between a professional and non-professional in any profession. Is people set goals and rules and they stick to them. Okay? So very important. I stick to the rules. High level, what I think is important in my trading engine room. Okay, I mentioned before, some people might have seen a similar diagram before, by the way, in previous webinars. I am huge on this. Okay, you need to be able to get this right because they all have a flow-on effect. If you are hopeless at analysis, what makes you think your trade plan is going to be any good and be a winner, let alone execute and manage the thing and make some money from it? One leads to another, okay? And if you want the trading account that's sort of heading in this direction, you need to be proficient at analysis. And if I could do my time again, if I could do my time as a trader again, I would probably say this now, I probably would spend a year just being an expert at analysis without even making a trade plan or executing a trade. I know most people get hold of a platform demo account. I'm doing it right. I've got the demo account, and then they're instantly just placing trades. Probably the wrong road to go. Become an expert at analysis, understanding the fractals, what the market's doing, support and resistance. Just look at the market every day and work out why it's bouncing, why it's doing what it is, get an understanding for it, and trade planning and execution will be easy additions to make money. Okay, but if you have no confidence in your analysis, I just stay away from fundamentals, Boyke, so I'm pretty much 100% technical. You know, I look at the markets and if they're really moving, I understand it's fundamentals, but I just always trade off. You know, I don't really look at a currency pair and go, fundamentally I'm bearish on this, so I'm looking to short it. I sort of let the technicals guide me, and then I get in at support and resistance around that. But anything fundamental, I try to just steer clear of. I just don't have the time to be having my head in Wall Street Journal all day or in front of Bloomberg or whatever. Okay? But not saying it's not right, just that's myself. So yeah, if you've got no confidence in your analysis, it's only going to spiral from there. Correct, Dragonfly. I always look at the calendar. Yeah, there's no way I'm going to be trading Asia and looking to place an Aussie trade right before their job data or their retail sales. No, because that'll end in a big fiery mess, fireball on the ground. I tell you, you don't want to go there. Okay, so I thought I'd put this in, and of course, trading rules. Trading rules are important under all these areas, okay? You've got to stick to all these. You've got to be good at analysis. The trade planning and execution will follow, and, stick to the rules and you'll all be good. It's actually quite simple. Okay, so my trading tools. What do I like to use personally? Price action is like always been the cornerstone, the foundations of my whole way of trading. Okay? I'll tell you one difference though, and I'll provide examples in a moment. Price action, I probably interpret price action a little bit different today to what I may have, say, a year ago. There's price action, I look at it like a language, like speaking the English language. We can all sort of understand it, most of us. But even within the English language, the Brits and the Aussies and the Kiwis and the Americans, we all speak our own little dialect of it, if you like. I say tomato, you say tomato type thing. I'm big on support and resistance role reversal. Not so big on diagonal lines, support and resistance. I'm sort of horizontal. I'll show you role reversal. Not big on EMAs. Maybe, Tobias. Roll, bread roll, roll. You know, you say roll, I say roll. Spelt different. Get the drift. Anyway, big on pivots. Huge on the pivots. Exactly. Color. Big on psych levels, and absolutely huge on the time of day. Time of day, this one right here is probably the most undisputed little technical indicator known to man. But if you're a market that's about to open or close at support or resistance, what do you think a professional trader is going to do with it? That is recorded, Ashley, yes. You're going to doubt your rules, chaos theory? If you have rules and you think you need to break them, you're just not making the trade. Or you're just doing enough homework to change the rules. Okay? Now, a couple of tips. Maybe for the more novice trader amongst us in the room here. But do not, well, I should say, use tools that are of interest to you. Not just because you attend some bootcamp class and see me using certain things, or you went to somewhere and saw another FX Street webinar and saw so-and-so using Stokes mixed with MACDs, mixed with CCIs, and a little RSI mixed with all sorts of EMAs. Just because someone says that or uses something doesn't mean you have to. Okay? You just need to find a couple of things that are more interesting to you, of interest, and you only need a couple of them to make money. Okay? Most indicators are price driven, therefore they overlap. You don't need to have a gazillion and one tools. You'd be quite interested to find sometimes how basic levels of support and resistance, like role reversal, are exactly the same. Pivot levels, EMA levels, psych levels, all at the same time. You don't need it. You just need to keep it simple, and you'll all be good. Yes, it is, Soul Man. Taking advice from too many, and this would be similar to tools. If you're someone who maybe doesn't want to attend a specific education organization, and you're like, you know what, I'm quite happy just to attend FX Street to get my education. That's cool, but I would suggest that you pick one or two people that you like who appear at FX Street and you stick with them only. If you go to too many people, it's just way too much information going on. I'm going to show you guys how easy I trade and how easy it is to make money, and you don't need to overcomplicate matters. It's hard enough as it is. Do not, keep it simple. Full-time, this is my third year full-time trading. Yeah. Trading there's just way too much info. If let's say that you're a professional tennis player, you want to be you're good, you want to be a professional, or you're taking up tennis as a young person. You probably don't want to go to a coaching camp where you have someone different every few hours of the day, every day, showing you something. to get a basic swing going, a basic serve or a backhand, you just need information from one or two people and get good at it and then perfect it yourself later on down the road. G'day, Ms. Pips, how you doing? It gets easier. Yes, it does get easier. Okay, so analysis. As I was saying, most important part of trading. Being good at analysis. Remember also, Aussie making lower lows here. Remember also, guys, some people, trading is difficult. Some people get jobs working for trading firms as analysts. They don't actually get past the analysis phase. Their job is to go into the office and draw up technical pictures and justifications for what shares or currencies or gold or silver are going to do, and then they present that to the traders. So they, and that, just being a good analyst or good at analysis is a thing in itself. Okay, as traders, we just like to add on a bit of planning and management and stuff and make money from it. Okay, but there are companies that rely on good analysts to actually give them the information. Traders, they'll look at the fundamentals, they'll get that information, they'll look at the technicals, they'll get the analyst information, and then they decide where they go put their billions of dollars. Okay, so let me try and say this let me go through analysis here, maybe more of a educational coaching style, but based on how I like to do things. Okay? Hands up in the room very quickly who sit down in front of their charts every day and they just look at bars and lines and things going on, and they're not really able to digest or calculate or understand what's actually going on. They're it's just all a little bit too much. And I've been there, so I can fully understand how difficult this can be. Many? I mean, there should be, most of you should probably be putting your hands up. Yeah, I have a guy recently joined boot camp in my room who's had this problem for years. Okay, no big deal. Okay, I want you to think about this when you sit down in front of your charts. What is analysis all about? Analysis, all you're trying to do is determine a bias. It could be just for the day, it could be for the week or the month. Just think about looking at the charts and going, am I bullish or bearish? It's all you need to work out. Okay? Because naturally, if you're trading like I do, which is trading a trend, because I'm a trend trader, right, have a bias. Well, my chart tells me that it's long. Well, be a bull. Line up areas of support, plan the trade, and execute it. It's quite simple. Don't look at the chart trying to understand. If you're looking at a chart and you're trying to understand whether you're bullish or bearish, forget it. Move on to another chart. Okay? So, I sit down, and the idea with my analysis is to determine my bias and which direction I'm going to trade, maybe during the day or the next few days. Okay? I'm also looking at a few other things. Now, this is sort of a little bit key to what some people might be scratching their head over trading every day. But I'm trying to trade probably one of three things throughout the day. The first thing I want to look at is, will I trade the US dollar, i.e. a euro dollar, Aussie dollar, pound dollar, Kiwi dollar, that sort of thing. Maybe a USD Swissy. If you're having mixed biases, you can do one or two things. You either line them up the way you see them, or you walk away. And we might cover a little bit of mixed bias off towards the end of it, because I have some ideas. Okay, so I sit down and look at my charts, and I really want to trade the US dollar. And if it's all aligned, trends working for sure. If it's all aligned, I'm really happy. Like if the USD is trending in any direction, like the euro's heading up, the pound's heading up, the Aussie, I'm like, cool. I know what I'm trading today. Now, if that's not doing it, I'm then going to go and look at the USD yen to see what the yens are doing. You get what I mean? I'm like, either probably going to trade the US dollar and its pairs or the yen and its pairs. And it's really only been lately that we've actually hadn't traded any any yen pairs for a while as of late. Okay. Okay, so Funky G, generally consider the first task of the day, coffee. To be honest, I need a coffee, and then computer, and then I'll show you. I'll show you what I do. Okay? It's quite simple. So, yeah, coffee I like. No, I don't, Kiwi Kid. I don't do lots of screen time at all. So, I'm gonna give a live example of how I'll approach this. Okay? So, I'll be looking to trade the USD or the yen. Okay? If neither of them are working, I'll be then looking at like my Euro pounds, those cross pairs. Or you might look at a Euro Aussie or something like that. So it's sort of like, okay, my priority will be this one, see what they're doing. If not, probably this one, see what they're doing. And if that all falls apart, this one. So I actually have an approach. I'm going to look to go and trade the USD pairs, like the Euro and the Aussie. And if they're trading, I'm going to do it. If they're not, well, if they're trending and doing what I want, that'll be my focus. These guys will largely be put away. Okay? Now, if the USD is not doing its thing, well, I'll be doing the yen. Okay? And then if they're not working, I'll then go look at the Euro pounds. I've had several days, guys, where the yen's done nothing, the USD pair's done nothing, gone and made 120 pips on the Euro pound. I'm cool with that. I don't care where I make it. I'm just looking for the simple trade. I don't want to trade things that are complicated. Okay. Now I'll analyze several pairs. So let's say that I decide, like 150 chaos would be good. Okay. If I analyze the US dollar and I like it, I'll make the same plans. I'll plan trades on, say, the Aussie USD, the Euro maybe. I'll pick 3, depending on what they're doing, and maybe the pound USD, because I know that with relative strength, things will pull back into areas and go, and some won't. So if I plan across 3, I've got a better chance that one of when I throw enough mud against the wall, something will stick with one of them and I'll do what I want. Now, quite often you'll sit back and you'll look at the Aussie and you'll plan it and you'll be like, cool, get back there and I'll trade you. It never gets back there. But then when you look at the Euro, it did get back there and do what you wanted. It was just a different pair. So I look at different pairs and then I look at planning the same thing, and basically the one that looks best at the time of getting into the zone gets the treatment. Knowing that, maybe this one goes into the zone, gets traded, that one doesn't make it, and that one doesn't make it, I still get what I want with that one. I've learnt the hard way with that. Picked direction, picked what the US dollar is going to do today, didn't get in anything because the one I focused on was relatively stronger and just didn't pull back. But this one did, that one did, and got nothing to show for it. And it's the same with the yen. If I'm going to decide to trade the yens one day, I'll look at like a Kiwi yen, the USD yen, the Aussie yen, or the Euro yen or something, and I'll plan them all the same way, knowing that maybe only 1 or 2 of them will fall into where I want. Very important. Okay, That's a handy little tip for someone who's sick and tired of being right and not having anything to show for themselves. Okay? I will never speculate. Okay, I'll show you some examples. I do not speculate. I need clear direction to place a trade. Okay? And also, I'm looking for as much confluence to plan off. Confluence is an important word in my sessions right now. I go market orders and, I have a few other things, Ms. Pips, but, pending orders are good. So, man, I just stay away from them, okay? So, confluence means I use price action to base my support off, and then I'm looking for other indicators to be at the same level, i.e. I'll pick price action. If I'm looking for support, I'll pick an area with price action, and then I'll pick one or two areas. I'll say, oh, it looks good from there, or it looks good from there to long. What else is around those areas that will get the attention of traders? And you'll find that one of them has a pivot and a strike level and lots of other roll reversal, all that sort of good stuff, and then that one becomes the trade plan. Okay? I don't really look at other markets, Boyke, except the US dollar index. Like, when I look at USD pairs, okay, I will always go to the US dollar index, this chart here, and see what's going on. I don't look at the S&P, I don't look at oil, I don't complicate it. But the dollar index is a pretty good insight to where we're going. Yeah? Like my Asia class, we predicted USD strength in this little roll reversal area we've got here this week. Okay, this is just an hourly chart, okay? And looks like we're right. We predicted long from here. We predicted long in this green circle yesterday, or today, and it's doing what we wanted. And later today we'll be looking at, we're going to do something like this maybe. Start there, and then we move on. Then we correlate that to the euro and the Swissy and all that sort of good stuff. If you're not going to use the DX chart, I highly recommend, this looks very much like a US Swissy. Making sure you cover off the Swissy as well. The Swissy can really be a guiding light into where the US dollar is going. Okay? More just a bias, Harley. You can't follow this thing pip for pip or point for point. It gaps and it sort of stalls and does all sorts of funky things. Okay? Okay. Now, important points. Very important to use a mixture of time frames. Probably Collins. Yes. I think they do all of the currencies, the yen and everything. Use a mixture of time frames, guys. I've also got here, do not get caught up in the now. Zoom out in your charts and establish the big picture. So you could look at that as being the long-term time frame. Okay? Just, if you're not into using daily charts and 4-hour charts, that doesn't actually bother me too much. Okay? But what I'm meaning is this. Here is the euro right now on an hourly chart. Naked with some basic support lines and resistance lines drawn on it. This is what I'm getting at. This is very important. Looking at that chart there, you can't help but think that maybe that chart looks a little bit like it could do this. It looks like it's been in a nice uptrend. Okay, are we just getting a nice pullback to like the 50% of that rise now, and now we're going to rocket off into the sunset? Okay, would you agree, based on that picture there, that that's what that looks like? And it could do that. It could. We don't know, but it could. Okay, probably need some fundamentals on its side, but we'll see. Anyway, and a lot of people will look at that and go, well, I'm going to long here, based on that, because that's all they look at. They look at like the hourly chart, that's sort of zoomed in. They're not looking at a longer term chart, or they should just zoom out on what they've been looking at. Because suddenly, when you zoom out a little bit, maybe that there doesn't look so bullish when you look at sort of the fact that that sort of was resistance and there's been this sort of longer downward flow. And then when you zoom out even more, it's like, oh, okay. I can't show, I'll show you on a 4-hour chart. I can't actually show you on the resolution that I have to have for HotCom. It doesn't really show you, but this chart is actually largely looking more like that. Okay? Zoom out, people. Get the bigger picture is what I'm trying to say. If you don't like using long-term time frames like 4-hour daily, whatever, but get an hourly chart, zoom out, and really, I mean, that's gonna, when we were zoomed in just now, it really looked like this. It could be possible. Okay? But now when I zoom out, to me it looks more like, actually, this is more likely. Then we might just come back up here and go and do that. Like someone mentioned, the head and shoulders. Neckline got broken today. Why couldn't we just pull back to that 132 area there, the psych level? Big on psych levels. Been back in this region many, way too many times before. Isn't that where the euro's going to go today? Okay, so zoom out, get the big picture, use that to establish your bias. If I was looking at it like this, my bias would be long. No way, no two ways about it. I don't care about the head and shoulders. People have been buying this for a few weeks. They're going to long it here. But it all changes if I looked at a longer term chart, or if I zoomed out on this one. It all changes. It's like, oh no, that's actually starting to look bearish. And so my bias would change from being bulls to bears. I don't really, Boyke, I look for the confluence. So I'll take any pivot as long as it lines up with the price action. Okay? And I've just repeated here what I've already said about the analysis of the foundations of your trading system. It's the absolute foundations, alright? You need to perfect analysis before considering pulling the trigger on a trade. If you can't, you're doing yourself a huge disservice. You might make it as a trader, but you're going to take a long time. The quickest way to make money trading or be a full-time trader is actually to be good at analysis, pick up the trade planning and the execution. Not the other way around. Not pulling the trigger and trying to work everything out later on. As I said, you might get there. It's going to take you 2 years instead of 1 year. Okay? So just a little bit more on how I would do my analysis. I do a lot of my analysis The foundations of my analysis, guys, are on this sort of chart. Naked, hourly, I've started bringing them into my bootcamp class. Okay? Because all I'm looking for, the foundations of how I trade, guys, is I'm just looking at these zones of where people have traded before. This is how I interpret price action. Now let me show you. See, in the past I would have traded like this, where trending up through here. Oh, now trending down, broken these lows. You can use a 4-hour chart. That's cool. Anything, RAM, longer term, daily 4-hour to establish a bias. But you need to establish it off something like that, or a zoomed out hourly is good. But don't do it on a zoomed in 15-minute chart or hourly chart. You got to get a bigger, slightly bigger picture. Okay, like the 4-hour. See, I think the 4-hour here shows a pretty good picture of what's really going on. So that should be, and now that we're all head and shoulders in here, I mean, that should really easy tell everybody what their bias should be today trading the euro. 5-minute, 15-minute Boyking, depending on the trade plan. Cover a little bit of that off right now. We've only got 25 minutes, so I've got a helter-skelter here. So this is what I look for, guys. Is the foundations are these lines you see are the zones where I think people will buy and sell from. Okay, now you look at that going, what a mess, what an idiot. Okay, but when used correctly, no, I don't use range bound. See, I wait for direction. And if I have range, I stay away from it. Okay? For example, let me zoom in here. Whilst in an uptrend, actually, let me just zoom out one little level more. Okay. This is cool. I would look at this, guys, as being largely range bound. So it's quite possible in that whole week and a bit that I probably wouldn't have traded that euro dollar. I might have traded something like, once we broke up here and pulled back to the support, I might have traded that, or I might have got sort of, okay, we're back at support to that. But once we bounced off here, came back to the top, sort of meandered down, I'm going to be like, we're starting to go sideways. If I make trades, I'm going to be speculating. I don't want to speculate. I want direction. And so this is when I would have been trading. Break, pull back to a support zone, getting long. Okay? Pull back to this support zone here because it's the tops in here, 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 here. Maybe getting long. Trying for that. Okay? Where I do like to trade is when things break out of stuff. One of my favorite setups actually I'm actually about to explain is, I look for a market that's sort of consolidating and at resistance. Okay, we know if I showed you on the 4-hour, this 133 zone is back at high level resistance. I haven't looked at harmonics pointing, to be honest. Okay. So I look at this zone up here, and I'm like, 133 was a huge resistance zone. Let me just show you on a 4-hour chart real quick. $133. It's been an area where people have bought or sold for the longest time. Okay? So that's an area that I'd like to trade off. I established these with these big areas. No, Harley, I don't. Okay? So, I'll establish an area where I want to pull back from. So then I'll go to my, does that mean that I look to short that day? No. Because on those big zones of pullback, those longer term areas, like on the 4-hour and daily chart, they can take a lot of time. Okay, you don't want to get caught up. You don't want to get caught up trying to trade and get psychologically damaged, if you like. Now, let's say you like that 133 zone. So on this day up here, it got up there, and you could have shorted. Down it came, and then out. So probably like break-even trading. And you try it again. Down, no. Break even again. It's like, okay, this is just way too hard to work. What if you just establish support in that area and wait for that to break? And then once that's broken, it's obviously going to provide direction. So what I do is sit back and relax and go, oh, okay, so we have some support building here. And we've got that long-term bias down. That's my zone. Well, if that zone gets broken, it's business. Okay? And then on this day, down, bounced off it again, came up, bounced off this area up here, which is the same as this area. I mean, that's an aggressive trade for me right there. And then boom. So you could have taken that trade number one. Otherwise, you're then just fibbing that drop. And then you're looking for the trade to get you in. About 6 Gamester, 8 maximum. Now you might have looked at this zone to get in as a trade because of the role reversal, and sure enough, it had a go, but it failed. So what do? Well, you've got a bias, so you go to the next zone, which is this one. And that's all I do, guys, is I set these lines, and then I basically look to trade off them, especially once they start trending. Well, then you just line up the next one. Let's say you missed all this opportunity, Ram. Well, then you're letting it go, and then you're just taking pullbacks back to the next zone. So this sort of thing here. Let's say that I missed the entire change up in this yellow area. No big deal. Where's my next short? Well, if I fib this drop, I'm going to look for areas where I'm going to short from. Now there's 2 lines there, and you're like, well, what one do you take? Well, you take the one that's got the confluence, right? So this area here, I know for a fact, had an extreme pivot. And I think it had a weekly central. And it's sort of close enough to the 132 psych level, so lined up that entry there to short. That's one that we actually set up in class. It's okay, Gamster, to use whatever you like. Just become expert at it, okay? Expert. And you'll all be good. I just like to use these high-level lines and base, and then when I've found a bias, I just use them for support and resistance. So, for example, also, you know, we've trended down over here. Okay, once you see this sort of deal, and you've broken through, you know, you've formed new trends, you can use these areas to long off again. Oh, off we go. Oh, support. Yep. Resistance is that next line. Yep. Support, back to that area. Resistance. Oh, looks like we're range bound. Probably don't want to trade too much in there. In naked lines, with just getting as many support areas as possible, I've found probably one of the most easiest ways to trade. Like, this is where I live. I live in this chart. It's just that on I can have a higher resolution on my other computer and can zoom out and see a whole lot more. Sometimes we'll line up a fib Harley, but I've sort of, to be honest, I've used fibs so much I can just sort of eyeball something and go, oh, that's a 50% fib. That's about the 618. See, this is how easy it is, guys. This is a perfect example of how I like to trade. Consolidating, not going anywhere. No speculation in here. While I'm sitting on the sidelines in here, not doing anything, most of you are probably trying to trade in here getting eaten alive. Speculating where its next direction is. It's lacking direction. Broke. Oh, went to the next area which we've already highlighted. Oh, back to the area that it broke from. Go make yourself 100 plus tips. No big deal. I just use the candles because they're clear to me. I don't use any patterns with the Japanese candles. Okay. Now, I've still got a little bit to cover here. But that's basically how I look for my analysis, guys. I just look for support. Once I've got a trend, I just trade it and I just plan off these lines. And then I know for a fact, the 133 strike level, confluence of indicators, that will be I know that was a central pivot. And then I place my trade and off I go. Okay? And that's it in a nutshell. It's really simple. And, but effective. Very effective. Yeah. Here's another perfect example of a top in a market. Now, swinging up here, down, sort of starting to lack direction, top, shot down, broke through our previous area, pull back to it. I mean, that is to me, that's an easy trade there. Right, so yeah, I go looking for a trigger. Right, so that takes you, once you've done your analysis, you've established a bias and direction. You want to look for, you need to build a trade plan, right? So what sort of trade plan do you build? Well, it all depends on the size of the pullback and where you're going to take it from. Okay, for example, just looking at this chart here, let's say that you have this sort of bias. Your bias is down. Okay? And let's say that once you've broken here, you'll look to trade that. No big deal. Down. And then you'll be looking for a pullback. Resistance. Down. Okay? And then once you've found a little base here in yellow, because price is sort of sticking to this role reversal here, and sort of double bottoming and not going anywhere, well, you then look at that and think, well, I can either long or I'm going to get the deeper pullback, like a fib of the drop so far. Okay, so what I do is you might look to make a trade plan here. That was nice. Still got direction. Trade plan here. Okay. And then a big trade plan over here. I am an aviator, Tobias. Yes. Okay. So the difference is, guys, is this trade plan, I'll put numbers on them. Trade plan 1, trade plan 2. This is trade plan 3. This is like a spot trade plan for me. These two, 1 and 2. And trade plan number 3 is more like a sort of swing trade. They have different criteria. And I'll show you, I use a template approach for my trade plans. Okay, I would use a different sort of, by template I mean different entry criteria. So this one and 2 have different entry criteria than 3. Why is that? Well, over here, 1 and 2, lots of resistance, lots of selling, lots of sellers in the market. What do you mean? You don't need indicators, Boyke. Those bars and those lines are telling you where people are buying and selling. And when they marry up with pivot points and psych levels and fib levels and stuff, time of day, you don't need anything else. That's all I need to make money. I'm not really a big counter trend trader, Harley, if I'm honest. Okay, so a spot trade plan for me, number 1 and 2, doesn't need so much confirmation. Why? Because in this case, there's lots of people selling, then buying. So once I've broken my area and pulled back, there's just way more people selling than buying, so I can just afford, I don't need so much confirmation to sell it. Likewise at number 2. But at number 3, if I'm going to trade this zone here, well, although it's resistance of this move down, there is a lot more people buying. No, I still coach them, Boyke. I just educate people not to use them as well. I give choices. See, I don't like to necessarily. I coach the boot camp theories, but I coach outside that because I believe that not everyone would suit the boot camp theories. I coach the way that people want to be coached more than, which is cool. Wayne's cool with that. Some people need to go down the road in a Mercedes. If you give them a Toyota, they're not happy about it. It's just life. You got to keep everyone happy, right? Keep it simple. Okay, so my template, spot and swing, for example, have different criteria, and it's mainly in the entry. Like over here at number 1 and 2, I'm sort of good with just like a 5-minute lower high type deal. 5-minute change of trend. I don't have a favorite. I actually like to trade off of support and resistance than a time frame. Just show me where people are buying and selling, and I'm all over it. If it's looking at it on an hourly chart or a 15-minute chart, no big deal. I'll take it. Okay. So over here, number 1 and 2, I'll be like, 5-minute chart. The first signs were rolling over on it. But over here at number 3, I'm going to be more like, you know what? That could take a day or so, half a day to roll over. So 15-minute chart show me what you're doing. It just needs more confirmation. So this might be 5 minutes over here. Okay, but this one will be more like 15. And they all have a little bit different stop criteria and all that sort of deal. Okay? But it's all to do with where you are in the big picture. And where does that all come back to? Your analysis. Analysis showing me at number 1 and 2 that I'm sort of just majorly swinging down here in a nice trend. Just take the first zones to short from that you've got highlighted. But once you've found this sort of sideways bottom and it's breaking up, that's quite simple to me that that's the sign you're going to get that bigger move. So you just go to a zone up the road looking for more confirmation with your trade plan. Is that clear to everybody? It's the sort of thing we're doing in boot camp every day. I think it's having pretty good effect. I'll probably look at like an hourly naked chart like this. Okay, so trade planning, okay, I use like a template-based approach. Now, the execution and management. It's always above a higher high, it's always a little high above the highs or the lows of the change of hesitation. Okay, so let's say you're sort of looking for it's swinging up and you're looking for it to roll over and you're getting in your trade. I'll always have my stop just above that area or below that area. Guys, I'm not doing live analysis here and recommendations, okay? It's education. Okay, so my trade plan will also indicate how many opportunities I'll take to enter the trade. This is a very important point. Okay, this could be the most important part of this whole webinar. Okay, and I've only got 5 minutes, so I need to helter-skelter here. Trade number 1 and number 2, I will rely on my analysis so much that I'd be willing to give it 2 opportunities to get in there. For example, if I get in a trade and it knocks me out and then looks like it's rolling over again and I take a loss, I'll take another shot at it. Because I rely on my analysis for direction. I rely that I've picked direction for the day and I've found a zone. So if I get this sort of deal, price coming up and I'm looking to enter, so it's giving me a sign that I should enter, so I enter. And then it sort of comes up, swings up, knocks me out, and then rolls over again, and then starts going, I'll take it again, like over here. So trade number 1 might have been here. And I get knocked out because of my stop up here, knocks me out or whatever, break even. I will take it again if it shows me that it really wants to go. And it's been a huge difference in my trading when I decided to do that. I used to be one of these people that would, take a trade, get stopped out, and then watch it go in my direction for the day and spend the rest of the day cursing. Not anymore. I will get in a trade, I'll rely on my analysis. Once again, that's important. I'll rely on my analysis, and if it knocks me out but then shows it's going, just like the price action trying trader, the 5 minute lower high forming, rolling over, that's it, really. Or a little CCI, 5 minute CCI or something, crossing over the 100 or 200 line, I'll take that, and I have it usually floating around. Now trade number 3, I'll be willing to have 3 goes at it, because it's a major swing, and it's got meat on the bone. So I'll be willing to risk because I think it's got 150 plus pips to it, I'd be willing to risk, say, 50 pips to get in it. And if you're not willing to do that, trading's going to be very difficult. And I have three basic rules. I've covered it in a webinar before. When you get to an area of resistance like 3 and you take a trade, it's going to do one of 3 things. It's going to go and do what you want and make you money. Or it's going to go and knock you out with a little higher high and then do what you want. Or you're going to get in a nice trade, be up say 30 pips, lock, stop, break even, and get knocked out, and then it's going to go and do what you want. I take care of all those situations with my execution and management. And so, Fernando, I'd rather have 3 trades with 15 pips stop on each and lose 45 pips that way than have one big stop loss. Because let's say you lose the first one and then get another one. We have made 150 pips, losing 15. But man, if you've got it wrong and you've got a big fat stop there, see, let's say that I'll just change color here. Let's say you take trade number 1 up here, and it goes against you. Well, then you're looking for let's say, and I put a 15 pip stop on it. Well, price comes up, knocks me out. No big deal. Now I'm looking to get back in. Someone else has put a 50 pip stop up here, okay? Well, what if this news comes out or something and starts doing this? Well, I'm not getting in the trade. I'm sitting on the side of going, whoa, obviously I've got direction wrong here. I'm going to have to go and do some more analysis and come up with a new trade plan. But the person that's got the 50 pip stops going, oh my goodness, that is really starting to hurt me. I've lost 15 pips. I'm like, okay, whatever. The person is about to lose 50. Psychologically, you're going to get hammered. Okay? And I think I've got another. So, I use a 15-minute lower high, higher low, depending on whether it's short or long, or a 5-minute change of trend. Okay? And remember, I'm looking for the confluence of those support and resistance zones, pivot zones, and all that sort of stuff. Okay? I've also used these for profit targets, guys. Big on the pivots for profit. Okay? Now, one other thing before I let you go is when I get to my profit, no matter where it is pretty much, I will, if I'm watching my charts, I will use a trailing stop technique to maximize it. What do I mean? Risk reward working, 3 to 1 or better. Okay. Let's say that I placed this trade here. And I let it go. And it got in. And it's doing this. And I've highlighted 132 as my take profit zone. Okay? So down we come. Oh, here's 132. I will always sort of just move my stop down. And once I get close to 132, I'll then bring it right down here somewhere. Okay? So I'll be back in 30 minutes for the full-time people, and then we'll go from there. Okay? See you soon, guys. Thanks for attending, by the way, guys. It was good. Needed another hour, but maybe we'll make that up sometime.